we're looking at it, we're trying to figure out, does it reduce friction? Can it unlock value? And can we trust it, right? Those are, kind of the three factors that we're looking at when we're talking about building technology or partnering with a vendor ourselves to implement technology. Those are the critical components.
All right, Rudy, thank you for joining me today.
Happy to be here. It's a great event out here, and what a great facility to be having it on the SMU campus at the George Bush Presidential Center, I guess is what it's called. A very nice venue.
Yeah, so for any of our listeners that are not able to watch the video, we normally, we do these remotely normally, and we have the occasion to sit down face to face because we're here at the AI Summit. So on that topic, what's it been like here for you today?
It's been great. I mean, you had a lot of good speakers out there, a lot of different mixed perspectives on things. There's been a lot of back and forth around, what jobs are going to be disrupted in the mortgage industry. We always find that, an interesting topic. We just listened to the CTO at Rocket kind of lay out their path, how they're thinking about automation in the business. I think that's interesting. So it's been good. A lot of different perspectives in the business out there to listen to. A lot of smart people on the floor.
Yeah, for sure. I don't know this a lot of what our conversation today is going to be, but before we do that, I wanted to ask you. We've had a couple of conversations. I did an interview with you, I don't know, 6 or 7 months ago, I believe, and we dove straight into the topic at hand, which was AI and tech. And I did get a chance to ask you about your journey into the industry. So can you walk me through that?
Yeah, sure. My journey into the industry was pretty unique. I was in the shoe business, fashion industry for many years. Worked for a family company called National Independent Retailers, a buying group. Spun that over, went into work for wholesale accounts at Candy Shoe Company, and then Steve Madden during his famous Wolf of Wall Street debacle, which ended up, took him to prison for a little while.
Right.
After that, left and got an opportunity to learn how to underwrite with, at the time, it was American Mortgage Consultants, now Citus AMC. And started there in 2005, left with a few partners and founded Opus Capital Markets Consultants, sold that business in 2014 and took an equity and operating stake at Consolidated Analytics, where we're kind of re-envisioning how mortgage services work.
What were you doing at the shoe company? Like, what was your...
Wholesale sales. So I was on the road traveling to conferences like this one and schlepping shoes around a season in advance, selling the next season's line of shoes to major retailers across the country.
All right, so you weren't in design or...
Did a little bit of that.
Oh, really?
Yep, did a few trips to Italy and Brazil where we did some design work as well and a variety of other things. So yeah, I've done a lot of interesting things.
That's interesting.
Yeah.
So you've been at Consolidated Analytics for 8 years, almost a decade?
Since 2017, yeah.
Okay. And both as CRO and COO?
Yeah, when I came in 2017, it was a much smaller shop. I came in actually as the chief operating officer at that time. I think we were maybe 15 people. It was a relatively small company. Shifted the focus over to sales and marketing. The company grew exponentially, both organically and through a variety of acquisitions that we did. And just this last year, we decided, hey, it's gotten pretty big. It's over 700 people now, doing a significant amount of revenue. Offices across the country and an offshore facility in Chennai, India, and felt like it was time to step back into that operating role. So step back in the chief operating officer role, and I'm focused on that today.
Interesting. Okay, so how did you? I mean, I know that you've transitioned over. Wearing both of those hats for a while, how did you make that work?
Well, I think I've filled roles throughout my career in both sides. I've been on the operations side in the mortgage services space. I did sales in the fashion industry and then brought that over into mortgage services at Opus. So I've done all things. I think my sales acumen has generally come from subject matter expertise. I can crack a loan file today and still underwrite the income on a non-QM loan or a jumbo loan, those types of things. So I think my knowledge of the details have helped my sales career and vice versa.
I got you. So the last time we spoke, I wanted to read this specifically. You mentioned that the future of automation may not lie in sweeping end-to-end platforms, but in bundling fractional components, which are small, effective niche technologies. So can you give me an example of what some of those fractional components are that lenders should be focusing on today?
Yeah, I mean, I think there's a number of folks that are out there, promoting sweeping automation, right? But in real life, that's not necessarily how technology adoption works. I think those fractional components, as I call them, those small elements that are like sharply focused and narrow, but that you can execute with expertise. Those are the things that are kind of changing the landscape. For us within like Loan DNA, it's very simple things like document classification and data extraction and all the data normalization and all those types of things that allow then agents and other things to process your data and move it throughout systems and all those things effectively. So those fractional components are the bits and pieces that really will drive the automation of the future. And at its core, it's a lot of just the data normalization. But how do you get there? Document classification, data extraction, and those types of things when you're looking at a loan post-close anyways.
Right. Yeah, and so I know there's been a lot of talk for the past several years that seems to only escalate about AI disrupting the mortgage industry, but there's not a lot of talk about how that's actually working in practice. So where are you currently seeing the most measurable return on investment in AI implementation, and what do those solutions look like?
Yeah, I think if you were to ask a mortgage originator, their answer might be slightly different than mine. So we're a mortgage services company. So the way that we provide services is normally with data and documents. Where we see the ROI most effectively today is what I just mentioned, which is the ability to get data, identify documents, get data from documents, then execute rules and things on those data sets. We have had an exponential lift in our productivity from going from a world where it was stare and compare, somebody's looking at a screen and then populating data on another screen and applying a compliance test to it or a credit test to it, to now a lot of that data can be populated by the system, by the LLMs, if you will. Originally it was OCR technology, right, and it's kind of antiquated, and now that we've used LLMs to identify data from documents, we're seeing a tremendous amount of lift in terms of the quality of the extraction. We still keep human in the loop. It's still totally necessary to have a human in the loop verifying the data for those instances where you get a low confidence score or something around a data element. It's still imperative that it's there, but the basis for all the testing that ultimately gets done in a due diligence capacity or an appraisal that's already been completed is the ability to get the data off the document, normalize it so that you can run tests against it.
Where do you see solutions still falling short?
I think anything that's like judgment-based or contextual in nature, any area where normalization of data hasn't taken place, I think a lot of people struggle with that, right? You want to go on this AI journey, this automation journey, but you don't have your data structured and it's not normalized. It's going to be very difficult, right? The model context protocols, these MCP layers that are coming into play now, I think that should help a lot of the vendors in the space and also the lenders, kind of normalize some of the data. That's not without its challenges either. But I think that's the tough one is, hey, I've got to have a data environment that's standardized enough where these tools can actually work.
Can you MCP, model context?
Model context protocol. It's essentially like a data normalization layer that sits between your system and your agents, if you will, or your vendors.
Okay.
So it's a way to translate data, like a common language, if you will, for data that's coming in and going out.
Okay. So, and you told me that doc-driven workflows were basically, they were living on borrowed time, and it was an inconvenient truth, but truth nonetheless. Yeah. So from your perspective, how close are we to a truly data-first mortgage experience?
Yeah, I mean, I said it before, I'll say it again. I think they are living on borrowed time. The mortgage industry is, for a variety of reasons, still addicted to paper, right? But those that have the edge are the ones that have standardized data and are able to push it through processes without an actual document behind it. How long? I think that's a great question. There is a investor requirement for transparency and tracking that requires documents today. There are legal ramifications and requirements for documents today. The mortgage industry is addicted to PDF documents, so how quickly it goes away, I'm not sure. There's a lot of players at the table that have to make decisions to move away from it. I think the people that are starting that process right now and have the data environment are making progress already. You can have the PDF document, but having the data standardized and normalized behind the scenes will allow you to work with the document in ways that folks that are just working with documents alone are unable to.
So I know that there's a lot getting in the way. Well, what would you say is the biggest roadblock to that data-first mortgage experience, the biggest one?
A lot of it's legacy systems and processes, right? And then just the regulatory environment. The expectation is that there is going to be a document that's going to be signed, and it's going to have somebody's signature, and I'm going to be able to compare that signature across all the documents in the file. And those documents are going to go to a custodian. They're going to get recorded at the local level, and we'll be able to track the paper flow from there. So systemically, a number of things have to change. I think there are vendors and agencies that are set up today to start working through some of those things, but we're still quite a ways off, I think.
Okay. So as more lenders build or adopt AI-powered income and credit analysis tools, what advice would you give institutions deciding whether to build in-house or partner with the vendor?
Yeah, that's the typical like build versus buy versus blend question. I would say that you should be doing the things that are important to your culture. AI shouldn't change your culture, it should amplify it. So if I'm an organization that is focused on my client experience, then I should be doing things with automation, whether it's income calculation or otherwise, that enhance the consumer's experience or the client's experience. If I am an organization that really has set myself apart by my operational workflows, then I should be utilizing AI or finding ways to utilize AI to eliminate waste and create efficiency in that process. So I think to the extent that, if you're one of those organizations, does it make sense to set up a tech shop overnight? Maybe not, right? Go partner with vendors that align to your interest, and vendors that understand your business, and ones that ultimately can integrate with your tech stack as well. Because if they can't integrate with the tech stack, you may be building more problems than are ultimately necessary. So important to identify the solutions by understanding who your vendors are, what they can do, and how they can integrate with you.
So how do you approach that decision internally and with your team? What do those conversations look like?
Yeah, I mean, for us, when we're looking at it, we're trying to figure out, does it reduce friction? Can it unlock value? And can we trust it, right? Those are kind of the three factors that we're looking at when we're talking about building technology or partnering with a vendor ourselves to implement technology. Those are the critical components. We want frictionless as possible. We need to be able to trust it. We need our clients to be able to trust these things. So that's how we're analyzing every bit of technology that we're building or buying.
One of the things that I've seen a lot in these just conversations that I've been a part of or just been a fly on the wall is especially at the C-suite, where executives can really get whipped up into a fever to implement something for the sake of implementing it, or because everybody else is doing it, because that it's the next step. And from any of my conversations with you, I never got that impression from you. You seem a little more reserved or measured in making that decision one way or the other. Is that something you've had to train yourself to not succumb to, or is that more of are you naturally not predisposed to want to jump because everybody else is doing it?
Well, I mean, I think the approach to technology now is pretty iterative, right? We'll get out there, we play with things, we have kind of a sandbox environment where we go and test things. So it's not that we're not actively trying, we're actively trying all the time. We're just deploying things that are ultimately working for us. So there was an instance a few weeks ago where we had a need within one of our business lines to create a tool that would create some efficiency around some borrower screening. And we said, okay, we talked to the tech team and said, hey, our project list is deep right now. This is going to have to wait a little bit. And we said, okay, well, let's go try to vibe code it, right? So we went in, we vibe coded it, and lo and behold, it actually worked, right? So we're not opposed to doing these types of things. I think we do them. We're always looking at, in that instance, does it unlock value, right? So, can it create efficiency for our organization? Does it enhance our customer experience? Can it affect our margins or our pricing? All of these types of things. We're weighing all those things, and we weigh them quickly. It doesn't take us a lot of time to think about, our business, and we understand our business really well. We've got a tremendous number of key stakeholders within our business that are wicked smart and understand the industry very well. So, I think a lot of it is having the right people, at the table to be able to help make those decisions.
Right, and kind of following up on that, to what degree do you think it's important that that AI and tech adoption reflect a company's goals, value, culture, and how do you personally assess that?
Yeah, I mean, I think I would reflect back on what I just alluded to in terms of what your company DNA is, right? So if your company DNA is client-centric, then, if you're high touch, then, you might need chatbots and other things to get in front of customers more often and, grease the skids as it relates to communication and those types of things. I think you have to assess, who you are as an organization and what you ultimately do well, and then pick the technologies that align to those goals. You can't do it all overnight, but identifying the ones right now that can add the most amount of impact, I think, is what's important. And that's a personal journey, if you will, that each company has to go on. And a smaller company is going to have much different objectives than a much larger organization. But I think in any instance, there are options for your small broker shop to your big top 5 lender in terms of automation technologies that they can pursue, whether it's customer facing, whether it's servicing related or otherwise. There's a ton out there, but it truly does depend on your identity and your capabilities. You need to know the skill set internally, make sure you pick the vendors and otherwise that can help you out.
So what would you say is your most successful tech adoption decision?
Yeah, I think right now it's as fundamental as it is, and maybe that's why it's the most successful, is because it's so fundamental. It's our loan DNA document classification and data extraction engine. We can take hundreds of different core documents and thousands of variables off those documents and extract data at an extremely high confidence rate generally. There are tons of LLM models behind it. Still some legacy OCR models for documents where it works well, where the cost is a little bit cheaper to use OCR. Those will probably turn into LLM models, but those have increased our efficiency tremendously. You're getting data off the documents, getting that data standardized so that it can be manipulated in whatever way necessary to process our, whatever service we're providing to a customer has been a huge lift. Things like income calculation tools that we're working on right now that are through phase 1 and pilot and moving into phase 2. Those have increased our underwriter efficiency as well. Using the first piece though, which is the document classification, data extraction. Now you get those things into an income calculation engine and you're just adding accelerant to it.
Right, okay. Well, looking 5 years down the road, what do you think is going to define success in mortgage tech?
I mean, what you hear everybody talk about is just the reduce in the cost to manufacture a loan file. And I think in large part that will stand to be true. But the guys that'll win are utilizing it the originators that'll win are the guys that are going to be utilizing it to create deeper relationships with their clients. Serve the customer on the customer's terms as opposed to old terms. I think we've heard some of the speakers today talk about, the benefit that they've seen in terms of lift and response and closing with borrowers that are utilizing text chat versus having to call in on a phone number. I think that the reality is, I know how I operate. I don't want to jump on the phone all the time. I'm pretty busy. Emails are my email bin. I walk in the morning, I'm 300 deep already, right? Being able to just text this information back and forth with a lender, that type of world, I think that stuff works, and I think that wins eventually. You got to meet the borrower or you got to meet the customer on their terms, and I think a lot of the technology is going to allow that to happen.
And where do you see yourself in Consolidated Analytics in 5 years?
Oh, that's a great question, and not one you prepped me for. I think we're gonna stay with our head down, continuing to invest in technologies. We like building niche technologies that ultimately will fit a wider ecosystem. Our Loan DNA platform is built with specific point tech that can increase efficiency within the process, and as you bundle these things together with APIs and otherwise, we think we can add efficiency to a mortgage originator that's originating loans or somebody that's working in the post-closing space. There are a number of gaps there. We're doing really well with the document classification, data extraction, income calculation. We've got a hedging tool that we're rolling out, a rate lock tool that we're rolling out, an agentic underwriting tool that we're rolling out. All these things that are in our product stack that are soon to be released, I think are going to create efficiency and transparency, and probably there's a quality component to it as well, right? If I can not rely always on the underwriter to make the decision, but back their decision with an agent underwriter that can see the problems in data and call it out, red flag it for my underwriter, those things are going to add value.
Excellent. I got one more question, follow up from earlier, which I didn't prep before either, but it's a totally innocent question. Because you said if you had a loan file, you could crack it open and you could underwrite and decision.
I think I could, yeah.
I'm still licensed as an originator. Okay. I could not hop into Encompass or Calyx or anything in originator file because it's been several years. So is that something that you maybe do from time to time whenever you're bored?
Yeah, no, actually, just this last week we had a deal. It was a securitization transaction. There were some questions. These were pretty unique loans, very large balance loans to business purpose entities. And there were a lot of questions around them because they were kind of uniquely structured with cascading LLCs and a variety of other things. And to get to the bottom of the answers, you have to familiarize yourself with the loan file. So yeah, I have no problem cracking a loan file from time to time, getting in, looking at the documents, calculating what needs to be calculating, and then sometimes educating our team with, I've been doing this for a long time. It's been over 20 years, I think, at this point. So when I can get in and help the team out a little bit, I do enjoy doing that.
I got to say, I mean, you give me a lot of really interesting information, but a C-suite executive still sitting down and cracking open a loan file underwrite is really blowing my mind.
Well, like I said, when we started, I think a lot of my success, and I think if you get too detached from the actual work, it's hard to understand what your people are dealing with 100%. On a day-to-day basis, right? So I like it from that perspective. I also, I want to keep myself sharp. What's happening in mortgage today, whether it's, we've seen a big product shift. There's a huge focus on DSCR right now, and DSCR used to be like a private money lending vehicle, right, or loan. And now non-QM, everybody's in the DSCR space, and we're big in that space, and HELOCs and closed-end seconds and all the things that are driving volume right now in a big part of our business. So I want to be able to sit there and have a conversation with you or a client about what's nuanced in those files. And in order to do that, I kind of got to get my hands dirty from time to time.
Yeah, I think one of the biggest issues that we have in the industry is that the disconnect from the executive level and what's happening on the ground. And so if there were more executives that were had their hands kind of in the mud like you were able to, that might cut down on quite a bit of that miscommunication, I believe.
I'll take that as a compliment. 100%. I'm not sure the team always loves it when I start digging around, but I still do it nonetheless.
Rudy, it was a pleasure. Thank you so much.
Yeah, thanks, Jake.